Welcome back to Commodity Champions, and moving on to the precious metal space then. Gold prices breached $2,000 per ounce mark in March by 6 times, delivering an 8% of return. Silver also has witnessed a 10% of gain in March, while natural gas is trading at a 30-month lows. What are the factors contributing to the price rise or fall? Answering that and more, I'm still in conversation with our guests here. I'll bring this to you, Naveen, and I'll start with gold prices first. And we've seen good gains onto this one. $2,000 per ounce, though, continues to be a stiff resistance.
Manisha, I think 2020 was one of the years where the gold performed pretty well. All the COVID stuff was happening. There was too much of an uncertainty both on the respect of the economy and the main street. So that was one of the best of the choices for people to have gold into their portfolio. And gold did touch $2,085 levels sometime in August 2020. Post that, there were a couple of things which came into the limelight. One was definitely the inflation. The gold acts against inflation, so it's a good hedge against inflationary concerns. The central banks also are buying gold. I think many central bankers have bought gold over the last 1 year or so, and I think it is a 55-year high in 22, where the number stands with the central bank at around 1,140 tons as part of their reserves. So inflationary concerns, the central bank buying, the dollar getting appreciated and later on getting depreciated. The hawkish stance by the Federal Reserve and the central bankers across the world created too much of an uncertainty. I think, therefore, the gold performed really well. If you see the 23 performance itself, the YTD from January till date for this year, the gold has given, in dollar terms, approximately 7.5%. And on the MCLs, the gold has returned to an extent of 7%. I was reading one of the articles just a few days back that the gold has been the best performer asset class in the last 1 year, and has given the returns to an extent of 15% in 2022. I look forward that I actually feel that the gold would definitely be a good asset class to hold on to your portfolio. 10 to 15% definitely matters for everybody to be there as part of their portfolio, which people don't really understand, being a low idle return asset class. But then when it comes to uncertainty, when it comes to questions related to geopolitical tensions, the inflation, the crude and everything, the gold is on the upside. So this year, till now, it has touched $2,009 level. It has not broken the level of 2,085 in dollar terms, but in Indian rupee terms, yes, the 56,200 level of August 2020 has been broken, and 60,455 has been the high for gold. I think there is some steam left. $1,950 would be something on the support side, but I do see 2010 to 2015 levels during the course of time. But all depends upon how the central banks play out with their monetary policy, and at the same time, the central banks, would they continue to keep buying the gold for their reserves? So I think there's little steam left out even today, even if it is $1,965 currently. I think 2010 levels can be seen in due course of time, but not too much of a bullish. It's a neutral stance, both on the bearish and the bullish side.
All right. So a neutral stand coming in from Naveen there. Pritam, what is your sense? What is the range that you're looking for in this quarter now?
I think in rupee terms, if I look at it, I don't see it going below 59,000 because you see a lot of buying coming at that level. But on the high side, I won't be surprised if we cross 61,000, 62,000 levels. My sense is gold is just playing by the playbook. Last 8 interest rate cycles, which has happened globally in the world economy, we've always seen that at the back end of the interest rate cycle, you see gold prices rising and they make a new high. So why should there be an exception this time around?
Totally.
To that, you add the fact that the safe haven dollar index is depreciated to 102 level again. So the safe haven money which is flowing to dollar will start moving back to gold, which is going to be a double booster for gold prices. So I'm extremely bullish in gold prices.
All right. So 59,000 on the lower side to 61,000 plus kind of levels is what Pritam thinks. So slightly bullish there. Anuj, what is your range?
I am very optimistic in for the gold, and my target would be $2,100 till the Diwali. I was targeting 60,000 till Diwali, but now I would like to revise my target because it had been achieved. So my target would be 62,000 on MCX till the Diwali, because this crude oil step will also provide the fuel to the gold prices, because inflation is there, and definitely this will attract gold as a safe haven or as a hedge against inflation. So I am still very optimistic for gold prices. If it correct around 59,000, I think this would be a level to buy and accumulate again. And I think it will increase and may test 60,000 till Diwali.
All right. I know, Kunal, you're most bullish when it comes to precious metals. So what are your targets now for this quarter? With the things that we've seen in the previous quarter already, are you changing your stance and what are your ranges?
Like you rightly quoted, I'm bullish on gold, and I'm of the view that $2,100 to $2,150 can be easily achievable during this quarter.
Okay.
And today it is quite muted because of the way oil prices are shorter. It again brings inflationary concerns, and that will lead to another rate hike. That kind of logic is basically behind today's fall, and I don't buy that argument. The fact is that sooner or later, either on the economic side, we are going to see some more woos, or we see a Fed is going to, stop this hiking cycle. Perhaps cut interest rate later, but they will give a signal to stop this hiking cycle.
Yep.
So that both the things which I am mentioning are at the verge of happening. You cannot time it in the futures market. I can't time it, but my best guess is by June we can see $2,100 to $2,150 on CME for gold. And India, that should translate somewhere between, 62,000, 62,500, that kind of levels.
Okay, most bullish
before June.
Most bullish on the panel till time. All right, that's about gold. But I also do want to come to each one of you with your sense on where or which metal are you picking up for this quarter? Because the last quarter has shown us that while every metal has closed the previous quarter in the negative, we've seen copper prices gain up by 8%. Kunal, coming to you first, which metal are you choosing and how much of gain or loss are you anticipating?
So again, copper, we have seen a major supply concerns from Chile and Peru, and the geopolitical, the unrest going on in both major copper producing countries have led to this upside. I don't think so it's sustainable right now. The moment you get an indication of a easing cycle, at that time copper will increase. But I would say better to be on a short side on copper, 785, 790, good levels to short, 810, 815 should be the stop loss. 740 should be again the target.
Pritam, what's your sense? Any metal that you're picking up on?
I think I will also stick to copper. It's been stuck in a range between 781 to 770 for the longest period of time. That's primarily because the demand is not picking up the way that we had envisioned. But the supply constraint is real. So, Manisha, even a little bit of turnaround in the global economy, we could see copper prices just shooting off the roof. So, if you talk about a quarter, I won't be surprised if it's able to breach the 780 levels. We could see levels of 810, 820, and then we could also reach 850 very, very fast. But like I said, it depends really on the fact that how the global economy shapes up and how the central banks play out their cards as far as interest rate hikes goes. So for me, my bet is again on copper. I would continue to buy copper on the lower end of the range, which is around 770 and with a bullish target.
All right. So this quarter could also show copper prices continuing to outperform. Anuj, what's your sense on silver? What are you seeing in sense of a range for this quarter now? And these current levels, the buying levels?
See, as for a concern about the copper, definitely these are the level to buy, and I'm expecting it may test 900 to 1000 on MCX very soon. But if you ask me for choosing one commodity, then I will choose a silver because it is undervalued if compared you with the bullions and the base metal. Because every commodity had touched the lifetime high, but still silver is not able to test the high of $50. So it is trading around $23 per ounce. So I'm expecting silver is a still undervalued commodity, and it will take cues from bullions and base metal from both. So I will choose silver, and I'm expecting in this year we will see it may test $30, and above $30 sky is the limit and might be test $35 to $40 per ounce.
It's a very, very bullish panel that I have at hand here. So buy in crude, buy copper, buy gold, buy silver. Any last comments that you would have, Naveen? I have less than 40 seconds perhaps on the show.
See, the markets are coming back, Manisha. We have seen whatever the worst we would have seen from 2020 onwards. The central banks look to be positive. They won't be so hawkish going forward. So the dovish stuff would definitely have a relief for the capital markets, including the risk assets. But in this particular case, I think for the commodities, with the China opening up, the crude prices bulging up from the OPEC decision, I think good time to be part of the commodities and definitely 10 to 15%. Remember, to put the money into gold. As
All right. All right. On that very bullish note, gentlemen, thank you so much for joining us and telling us on what to expect from commodities in the month of April and the current quarter as well. But with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.